Welcome to Better Returns, where you will learn how to escape the volatility of the stock market by passively investing in real estate like a pro. 90% of millionaires earned and maintain their wealth by investing in real estate. We will share real-life examples from savvy investors so you can do the same. This show is for educational purposes only and should not be considered legal, tax, or investment advice. He was the captain of his high school track team. Your host and my dad, Matt Hansen.
Welcome back to the show. I've got my friend here, Jennifer Falloon, with us today. Jennifer is the owner of Vorsa Investments. She currently owns and operates over 900 apartment units nationwide. She partners with her investors to offer alternative investments outside of Wall Street, which I love that about you, Jen.
Mm-hmm.
Well, let's go ahead and get started. Tell us a little bit about how did you get into real estate? How did you discover the value of it?
So I was drug in. I did not discover anything. This was something that my husband wanted to do. And I was like, go do it. Don't care. And so, but at the same time, he was getting into this and, going to RIAs.
Mm-hmm.
My son was trying to get into the military and so at a RIA, he was like, let's buy this package. It was like a 3-day boot camp. And I said, okay, that's great. Let's do it. Bought the VIP. And turns out I had to work that weekend. So I had told my son, like, guess what? You're going to this real estate boot camp. And he's like, that sounds terrible. Don't care. I paid VIP tickets. You're going. However, at the same time this was going on, my son was trying to get into the military. And, we were really transient at that time. They kept losing his paperwork. And it was just like this nightmare. And, then, I guess the application process or whatever that is would expire and he'd have to re-enroll, and the recruiters didn't want to help him because they weren't going to get the commission. It was this nightmare. And my husband and I were in the kitchen one night and he came down and he said, Mom, I just want to let you know that if I don't get into the military this round, that I am going to commit suicide. And he's like, because I don't have a purpose. And if I don't have a purpose, there's no point in me being here. But I just want you to know so that whatever affairs you need to get in order, that's done. I don't want to create a financial hardship for you. So get life insurance, whatever you need to do. And then he walks out of the room. And I just lost my mind. I'm bawling and I'm praying. And I'm just like, this cannot happen. So then, I make him go to this 3-day boot camp that he didn't want to go to. And he calls me after the first night. He's like, you've got to come down here. You have to do this. This is my purpose. This is what I'm supposed to do. And so, of course, I was all on board. I mean, I was like, let's go. However, and I don't know if you've heard this part of the story, because I don't always tell it, but we paid $1,000 for this VIP ticket. Right. And so I drove to Austin. So we're in San Antonio. I drove to Austin where the event was on Sunday, the last day. And because we were in VIP, we were in this special room and they just kept giving us all this stuff, right? Like, here's your website, here's your business cards, here's your CRM, here's this, here's that, here's books, and I was like, man, this is the best $1,000 we have ever spent. And on the way home, because my son drove my car and I rode with my husband, I can't tell you how many times I said, I cannot believe this was $1,000. Cannot believe. And nobody corrected me. However, so, fast forward a couple weeks, I leave my job, which, a 6-figure job. So I'm like, I'm going to do this real estate thing. Because Cameron at the time was only 20 years old, and so I'm like, he can't do this by himself. My husband, right, of course, is the breadwinner. So I left my job to do this real estate thing. And I'm checking emails, and here's this email. It's a receipt for $50,000. And I was like, and at first I was like, oh my God, they erroneously charged our account. They have to put that money back. Like, that's my house buying money. I'm going to buy a house with that money. And I'm freaking out, right? Because I'm like, they have to put this money back. And as I'm like digging, trying to find like their contact information, it opened, like, it was like, I don't know, like the light switch flipped, and I see all this stuff that we had gotten. And I was like, that wasn't no $1,000. They did too charge our account $50,000. I could not wait for those suckers to get home. I was so mad. And I was like, you spent 50 grand on this stuff. And I threw this big fit. But really, at the end of the day, who wouldn't spend $50,000 to save their child's life?
Yes.
Right. So in the grand scheme of things, like I think it made me madder that they tried to hide it. And my husband was like,
Oh
we
my
were going to get that money replaced before you ever knew it was gone. And I'm like, well, that was a lousy plan. But it's a funny story now, but I would spend $50,000 every day if it saved my
Exactly.
son's life and gave
Oh my,
him purpose, and
yes.
so, we started single family like most people do, and we've run this business together. And then when Vorsa Investments started, when the other light switch flipped, that we were like, we need to be in multifamily.
Hmm.
He kept running the single family, and I run the multifamily. But he does great at raising money for me. I'm like, Cameron, I need 50 grand. Cameron, I need $500,000, and I
Really?
send him out, and he provides.
Oh, that is probably the most compelling why I've ever heard of anything for anybody to do anything, particularly even in real estate. That's why. So you're at 50,000 is nothing. And really, you're starting a business. What business can you start for
Right.
50 grand as the startup cost?
Yeah.
That is
And
really quite reasonable. But I know I've spent lots and lots of money on masterminds and stuff, but I've always got my money back at the
Mhm.
end. And it may take a year or two or three, but yeah, I mean, well over six digits that I've made on things that I've
Yeah.
spent maybe 30,000 on. So
And
yes,
to this
yes.
day, Cameron's more involved than I am, but he's still involved with that program very much. And he's made friends and mentors, and, we've done lots of business, and our money has been, made 100 times over.
Yeah. Yep.
But yeah, it was, I think, just the shock, of it at first, but you're right. We literally started a business, and we ran that business. And, I think, knock on wood, we've run it very well.
And part of it is you invested in yourself. That was an investment in your family. I mean, from a business standpoint, but just
Mhm.
this is knowledge you'll never lose. Even if you didn't really use it for
Sure.
this, it's applicable. Like, oh, I understand how to passively invest in real estate. I know how to do all these things. It does have that, particularly for a young person. It's so great for him to see that this is what my
Mhm.
mom and dad are doing, and they have that the rest of their lives. And they're going to share that with other people because it's so powerful, the knowledge that you got from it. So I
Yeah.
commend you. I can see I would have behaved the same way. It's like, what? Well, that's you
Yeah.
sound like my wife, because I always tell my wife before I sign up for something, but it's always a discussion like, okay, should we really? Are we going to get it
Mhm.
back? And then when you get a check for, we had a $103,000 check that came in the other day for something that an apartment complex that we passively invested in that we sold.
Mhm.
That's okay. It worked out pretty well.
Right. Yeah. And what I love too about it is, I didn't grow up wealthy, or I didn't have educated parents. And so, I got to like kind of break that generational curse. So my son's children, my grandchildren, even my great grandchildren will be raised in this, mindset, like
Yes.
a wealthy mindset, which is very much different than the middle class mindset. Like, my children and my grandchildren will never worry about, a financial advisor and wasting your money on them. And they'll never know what it is to like have to cut coupons and have to,
Mhm.
live off the government. Like they'll never have to know that. And so there's a little bit of pride there that was like, okay, from here on, our generations, the generations of my family, are completely, their lives are completely changed.
Right, because you basically solve a light, if you will. So what advice would you give to other people that are just discovering this to get over the fear of, okay, well, I know the first time I wired $100,000 years and years ago, it was like, oh my gosh, I didn't think I slept for a few days. Like, did I do the right thing? What can people do to be comfortable with, okay, don't have to rely on Wall Street for all my investments? What's your recommendations?
How do you put your money in the stock market and sleep at night? It's
Yeah.
like, vet it better, vet your syndications, vet your GPs, vet, the deal that you're going in on. Um, it should be very conservative underwriting. And there's always fear, right? But I mean, it's an investment, right? And so you can put your money in Wall Street and you might make some, but at some point you're going to lose it. In multifamily, or real estate at all, as long as you're buying correctly and conservatively, you'll never lose your money. There's just no reason to lose it. Even if the market crashes, what nobody talks about, the media certainly doesn't talk about. In 2008, there were more millionaires made than people lost their houses, but they don't teach you that. Because the people that were smart bought up all the foreclosures, right? They saw it coming. Listen to like the gurus, listen to Warren Buffett, listen to Robert Kiyosaki. When they start buying, that's the time to start buying. So, you need to just get over that fear and turn that fear into an excitement. Like, I'm always confident in my underwriting or I don't buy it. Right.
Right.
And I vet my people very well. I vet the GPs that I partner with. I vet my LPs very well. So there is no reason not to sleep. If my houses are hit by a hurricane and I know how that is, they're insured, right? So we're going to collect the insurance money. If a fire came and wiped out our entire complex, it's overinsured. We're going to get our money back. We vet our tenants very well. And we're very kind to our tenants. We're very fair to our tenants. So there's never a mass exodus. But even if there was, we rehab and raise the rents and move better people in anyway. So, SEC regulations, we're not allowed to say it's a safe investment, but tell me how it's not safe, except for putting your money in with, a shady GP or a shady syndication that you did not vet. That's the only way you're going to lose your money. The only way.
This is pretty much true too. And I've had one bad investing experience because I didn't vet all the partners. I vetted one, the one that I was investing with. I didn't vet the other ones in the asset managers, and that's so critical because is there anything you're investing in Wall Street that's actually insured? So if the property does get hit by a hurricane, well, we have insurance for that. If the tenants can't live there for some reason, we get business insurance, lost income insurance. It's incredible. Now and it's really, like you said, it's operator error is the thing you got to worry the most. If somebody did not manage things well, didn't manage your money well, or didn't manage the property manager, that's when you get into trouble. And that's why it's so important that, Jen, I would invest with Jen, no question, because I know you well enough. I know your performance. I know what you do. You're all about the numbers. You manage things well. You're on top of it. And that's what I think people really educate themselves and vet the general partners really well. That's so important because that's who you're investing in, a person, not just a property.
Well, yeah, for sure. And if anybody is watching this that isn't investing in anything or has never done a syndication, I actually have a checklist. I don't know, it's really a checklist, like a questionnaire. It's like 50 questions to ask a syndication. If you email me at jen@forceinvestments.com and just in the subject line, put syndication questionnaire or how to vet a syndicator. It's on my website, but I'm happy to send those questions and ask those questions. The other thing that I would really recommend is go visit the property. Because if you don't see it, and you don't have to, and I have investors and I have 900 doors, not 900 complexes, by the way, but I do have 900 doors. It's not always possible for somebody that's working a 9 to 5 to visit every complex, but at least visit your first one, your first syndication, see it, see how we walk it, see how we do our due diligence so that you're comfortable. You're like, oh, I get it, and who our team is, like, who's the GCs? These are the people doing the work. Are they doing adequate work? Are they doing slumlord, I call it Band-Aid work? Who's the managers? Who's the property managers? Do you like them? Do your research on them. Go to their Google site and see what other people have said, right? Yes. So it does take a little bit of work, but if you're that worried about your money, what is an hour of your time to really vet, who you're going to be working with? And my hope and my prayer is to always, when a syndicator comes in, it's rinse and repeat. Here's your money, give it back to me. Here's your money, give it back to me. So this is really kind of like a marriage. This is a lifetime, I'll be doing this, the next 30, 40 years. Even if I'm passive, but my son's taking over, my grandkids will be taking over. So even if somebody is starting out young, like, just know you're married to us. Like, we use the same calculator. We have the same criteria. We'll never not say, well, let's be a little liberal with this number and, make it work. No, we're super conservative. And we've had people not invest with us because they're like, your numbers are way too conservative. And I won't apologize for it because I'd rather be conservative and make it up on the back end and be like, oh, look, we got all this extra money on the back, than to write anything liberally and then be like, oh, sorry, we can't pay you because, I wanted to please you and not be a conservative underwriter. And now you don't get paid, or our other LPs don't get paid. That will not in my business. I would sell my house, my cars, my kidney before I didn't pay my LPs. So it's
Right.
to their benefit and their safety to have such conservative underwriting.
And then that's good. As an investor, you also need to know what your criteria is. What is your risk tolerance? Because I know some people, like we invest in some startup businesses where I know I could potentially lose a lot of money there, but the reward is so high, but you know that. But even within the multifamily bucket, there's some people that are general partners or sponsors of deals that they're out there in the fringe. They're taking risks. Their speculations are pretty high versus someone like you that's super conservative. That okay, my most important thing is that, and I'm going to tell you up front that we're not going to say, yeah, we're going to give you 15% returns at cash on cash, whatever. You're going to be super, super conservative. And that's really good that people need to get a sense of who you're investing with and what their underwriting is. And you did a great job of explaining yours, Jen. Yours is super. And I think I'm on that end too. Like we don't take a lot of risk on our stuff. We're buying $40 million apartments. It's very conservative. It's pretty safe. But if you're buying, like if you're investing in a 115 unit in a small city somewhere out nowhere, that's risky. And then you need to know that. And hopefully the sponsors are telling them that. So yeah, that's a really, really good point. What other tips do you have for like new investors in determining, they hear all these terrible things about what's going on in the real estate market? What's your take on the outlook on, your crystal ball, Jen? What do you think that
Oh yeah,
looks like
my
for
crystal ball.
investors?
I mean, I'm excited. And I know that there's a lot of fear amongst investors and, oh, the housing market. And so there's two different sides, right? Yeah, there is the single family housing market, right? And everybody's like scared that there's going to be a 2008 repeat, but that does not apply to multifamily. Those are
Right.
two different worlds. And regardless, however, having said that, investors are very fear driven right now because they're, oh, the housing market, which is just insane to me because this is the time to be excited. So to me, if I was even a brand new investor and I had somebody say, look, this is the time to buy and here's all the reasons why, things are going to be on major discount. And who doesn't love to shop off the clearance rack, right? I love clearance racks. In the real estate world, everything's going to be on clearance. And this is the time because again, we can buy houses and apartments for that matter, pennies on the dollar. And, last year we had a buying frenzy, right? It was just this crazy boom. We're going to have that again. And you want to be able to have that inventory to sell when the market goes back up. So I would say if you have any dormant money at all, so first of all, any dormant money, especially in old dormant IRA and 401k accounts, you are losing money. You need to pull that out right now, put it in a self-directed account so it's a rollover, so it's non-taxable, and get it in real estate because I don't want to have to say I told you so 3 years from now when we bought up and we're cashing out for millions and you let your money sit in a dormant account and now you lost and you don't have anything. Because the worst thing to do is, and me included in 2008, 2009, we slept and we, chewed our nails and oh, the sky is falling when we should have been buying. And so that's one of my biggest regrets. And in fact, there's a meme that says, my biggest financial regret is being in junior high during the 2008 crash. And I sent that to my son and he's like, that's so true, right? Like I could have been a millionaire. Like had we done and even had the knowledge in 2008 that we have now,
Right.
I'd be on a beach right now. We'd be having this on a beach. I'd have a big sippy cup. My cabana boy would be behind me. Right. And so I just don't want I want people to understand that and understand that this is a huge opportunity, a time for opportunity, a time to break generational curses, a time to truly be wealthy if you should so choose. And wealth isn't for everybody. I get it. But if you have ever had that inkling, like, I can do more, or I need more, I want more, this is your moment.
Yep, I would agree. It really is. And this is, as you said, I didn't know that stat about in 2008, 9, whatever, more millionaires were coined than
Mhm.
in any other time, because you don't hear about that stuff. Wall Street doesn't tell
Right.
you about it. And they didn't do it in Wall Street. It was probably it was in real estate and
It
other
was in
things.
real
That's where
estate.
everything was so
Yes.
depressed. And like,
Mhm.
if you had dry powder, as they say, you had cash. And we're kind of doing the same thing as you, Jen. Like, we've got some things under contract right now that we're closing by the end of the year, but probably not going to buy anything until first, second quarter, or hopefully by the end of first quarter, things will start to bounce back a little bit.
Yeah.
And there'll be opportunities to buy that are going to be great. And, you just can't be fearful about all that stuff. And if you're experienced, I mean, we've been doing this for a while. I mean, and I have partners that have been doing it for 25 years. And so they've seen these cycles. And that's the other thing is, work with somebody that's experienced, that's seen cycles, that knows what's going on. And it's pretty good. It's one of the best risk adjustment investments in the world, real estate in the US, particularly multifamily, because everybody needs a place to live. When the economy gets tough,
Yeah.
you know what? We're moving into apartment buildings.
Yeah. And because you buy B class too, right? Or C
Yes.
class, deferred
Yep.
maintenance management, make it B class.
Mhm.
That's the sweet spot, because when the economy is good, our apartments are full. When the economy is tanked, our apartments are full.
Yes.
Because we're a working class apartment complex and people have to have a place to live no matter what the economy. And maybe that looks like, we don't raise rents for a year or two. That's okay. We'll raise rents on year 3, year 4, maybe hold it an extra year than we anticipated, but we're going to make that up on the back end,
Right.
so it's just a really exciting time for me. I'm super excited to kind of be cash heavy and really be in an education space to tell people, like, this is your moment. Like, this is your breakthrough moment. Do not sleep on it.
Right. And that's a good point too. Now it's time to get educated on this stuff. So, you don't make quick decisions. Like, you're not going to invest $100,000 tomorrow after you just discovered something. So I think that's great to get educated on what's going on in real estate over the next 3 or 4 months, vet some operators. You can find out, okay, who do I want to invest in when it comes time? So I think that's really a valuable piece of advice. Just like we're getting ready to buy, you should get ready to invest. Do your vetting now.
Yeah.
So what markets do you like? What markets do you think, okay, great rental markets? Where are you putting your money? Where are you investing for your investors?
Midwest and Southeast. So I love, love, love the Midwest. And that's your working class right there. So they always have to have, again, well, you have to have somewhere to live no matter what, but that's your working class.
Okay.
And the Southeast, those are pretty much your retirees. And I'm like, and I love, so I'm from the Midwest, which is why I love it too. And I love the beach. So I love the Southeast and, all those states. I love the southern states, and that's where people are going to retire. That's where people vacation. And, again, that's where your workforce housing is. So those are my favorites.
Good. Mine as well. Yeah. Texas, Florida, Arizona. And that's where the population growth is. And that was the two most important things: employment and population growth. And that's where people are moving from the north or the coast, mostly the coast. East Coast people are moving to Florida. West Coast people are moving to Texas. That's what you kind of see. We see that, we were talking about this before the show. You actually look at the U-Hauls, and I've heard that. Where are the U-Hauls going to? And that's how deep you guys go, which is great. And we do that as well. Like, so, okay, if they're dropping off a whole bunch of empty, they're full coming into this city, this is a great city to invest in. Really
right. But you almost need to get ahead of that a little bit.
Yeah.
Because if you are right in the middle of it, even, or especially at the end, you're going to overpay. So if you have the knowledge to kind of foresight, right, and be like, okay, there's not really anything here right now, but you see the path of progress, right? You see the targets coming in, you see the Starbucks, and it's like the next town over. That's where you want to buy, because that's the town that, you might have to hold it a year or two, but in year 2, year 3, that path of progress is hit. Now you're sitting on a gold mine.
Excellent advice. That's wonderful. Well, I think it's time for us to move into the lightning round. Jan, are you ready? I didn't tell you about this, Jan.
You didn't? No, I feel bombed here. Okay, I better do well.
You're the expert on you, Jan. So these are just 5 fun questions to get to know you a little bit better. Okay, you're ready?
So nervous. Yes.
Yes. What was your nickname as a child?
Oh my God. Beano.
Okay, you have to explain that. Beano?
Beano. Um, I have no idea why it was Beano. That's what my mom called me, and I was Beano. And yeah, and then finally in junior high, I was like, you literally can never call me that again, especially in front of my friends. Like, it's forbidden. Don't do it. And now I kind of feel sad that I said that because she, honored that, and I have not been Beano in 30 years.
That's interesting. That was a term of endearment, but yeah, I don't know. Isn't Beano the caplets you take when you have gas?
Yes.
I'm
But I don't
sorry,
think that
Jen.
existed then. Okay, so in my mom's
Okay.
defense, that did not exist
Okay,
then.
okay, okay.
But yes. So thanks for even bringing that up because it never
Sorry.
occurred to me. But
Okay, number two. You did well in number one. I think you're gonna do good on the rest, Jen. Okay. Are you a morning person or a night owl?
ugh, can I say neither? I'm really
What?
optimal. No. Okay, so first of all, I'm not a
Wow.
morning person. You don't even want to know me in the mornings. Like I am angry and bitter. It was like I had this super hard life that I haven't recovered from, right? I'm so cranky. And it takes me about an hour to get out of that. And so my husband, God love him, he's a morning person and he sings and he like dances
Oh.
and he's so happy and I want to kill him. Like, and so, but I also like to go to bed early. So I like to go to bed early and sleep in. Like, I don't know, I probably need to be on some vitamins. But really like 11 o'clock to like 4 in the afternoon, like that's my go get 'em time, right? Like
Okay.
I am on fire. But 5, 6 o'clock, well, probably 6 or 7. I'm like, okay, I'm done. Like so, and I want to go to bed early. So I'm not really a night person or a morning person.
I'm gonna create a new category. So I'm taking a poll there that I'm gonna eventually
Okay.
publish. And I'm gonna have to put you a category of both. You're the first person to ever said that. And that's interesting.
Yeah,
Well,
there
good. I
has to be
like that's
like, why do we have to pick between morning and night? Why can't we be afternoon people?
well, typically you have a natural tendency. I'm a night person, so is my wife, but neither of us talk in the morning. If we have to get up, we usually don't get up until noon or 1. If we don't talk unless we have to. So I can appreciate you having to deal with your husband if he's chipper. I couldn't imagine
God.
my wife was that way. I'd be like, we have agreement. We don't talk first thing in the morning. And it's been that way. We've been married 33 years. We've early on. So, okay, that's interesting. Okay, number 3. What would be the first thing you do if you won the lottery?
Invest it.
What would you invest
Uh,
in?
oh, I'd buy apartments. Oh my gosh. Dude,
Good
when it was like
answer.
$1 billion, no lie, when it was like $1 billion, I was like literally underwriting. I was like, how many apartments could I buy if I won the $1 billion lottery? Like I had it all figured out. I was like, I had them picked out. I knew exactly what I was going to buy. I'd be able to pay cash for them. So I'm not syndicating. So 100% of the cash flow is mine.
Oh,
Dude, I had a plan. Like I knew I was going to win that sucker. But here's the thing is you don't win if you don't play. And so I refused to, and for a quick second, I was like, man, I'm going to take $100 and go to the convenience store. And at the end of the day, I was like, how wasteful, right? Like I could give that $100 to a homeless person, it would go further. But I was ready for it, dude, even though I didn't play. And whoever won that, if you're watching this right now and you won the $1 billion lottery, you call me because I have the apartments all picked out already. I'll take good care of you.
oh, you're such a good planner. That is good. That was a great answer. Very good. Number 4. If you could live anywhere in the world, where would that be?
So I'm not super world traveled, but in my heart, I want to live in Ireland. But I also know
Oh,
that it's cold and snows there, so I don't know if that would really be my place. But maybe, like, if I could pick two, I would pick like Ireland and like Fiji or
oh,
New Zealand, somewhere tropical, and I would bounce between them.
okay, that's good. That sounds like fun.
Okay, good.
Okay, and number 5, the podcast is called Better Returns. So what's one piece of advice you would give to new investors to help them get better returns?
Um,
One key nugget, Jen.
don't have a financial advisor. Period. Nobody should have a financial advisor, and I'm so sorry for the financial advisors listening to this. Yeah, that it like that's the one thing that like just grates my nerves. It makes me like, like chomp my teeth, like grind my teeth. Like, don't have a financial advisor. Just don't.
And I'm going to go off on that one, Jen, too, because I've got probably 5 people that are like, oh, I'm interested in passively in apartments. Then they said, but my financial advisor says I can't do that. Hold
Yeah,
it.
my financial advisor that
What?
makes $100,000 can't advise me on how to,
Invest.
triple my investment.
Because they
Like
don't
what?
want you to, yeah, they don't want it outside of the stock market. They don't make any money off of that. Well, how can you be a fiduciary
Yes.
if you don't offer everything to me? So, I mean, I'm sorry, that's a really key point for me. And I've
Yes.
never had somebody that had a financial advisor invest. No, I have. Okay, I've had two. Okay, over the years, I've had two, but it was like a real struggle. So I have a
Mhm.
couple people, but more will say, no, my financial advisor says no. So I'm beginning.
Yeah. Yeah. Here, I'm going to give my financial advisor $100,000, but they don't realize you didn't invest $100,000 of your money. You invested 80,000 and he took his cut. Anything you make, you didn't make 100% of that. He took his cut. So it's like, what sense does that make? Like, but again, okay, that's that middle class mindset. And when you're in the middle class, you're taught when you have a financial advisor, you're made. That's what makes
Right.
wealth, a financial advisor. And they don't know that you've just cut off your nose to spite your face. Like you just cost yourself tons of money listening to this guy that you're paying commission to. Then also, so while I'm on this rant, if he lost all of your money, he's not replacing any of it. In fact, he's going to ask you for more so that he can repeat the process and lose your money again. At least when you invest with a good syndicator that you vetted, if your money did get lost, it's going to be made up. It might take some time, but your money isn't just poof gone. It no
Right.
longer exists. It might be on hold for a minute, but it's there in
Right.
hard assets that you can go visit and touch and see. And so anyway, sorry,
Yeah.
financial advisors, but you're costing your clients tons of money and you're not
Yeah.
doing them any favors.
And I love when they say, well, I'm diversified. You're diversified in stocks, bonds, and mutual funds. That's not
That's not
diversification.
diversification.
It's all the same asset class. It's paper. It's paper.
Right. Yeah.
That's
And I
just
am
it.
all for diversification, but know your stocks well, right? Like know them and don't have all of your money there. And don't have all of your money in one complex, right? Or one house. Like that's diversification.
Mhm.
So
And
anyway,
that's why
yeah.
my passive investments are in Texas, Florida, Arizona, and Tennessee. I don't just invest in Florida. I don't
Mhm.
just because you're right. So anyways,
I
I'm
know.
yeah,
It's a
you hit
whole
me. That's a
rant.
nerve. That's a nerve on mine too. Is like that financial advisors. Yeah, they're good, but they don't give you the whole picture. We're going to show you half of your opportunities, and the ones that really can make you money, we don't offer those, so you don't get access to those. The ones that can triple your
Right.
money in 3, 5, 7 years.
Right.
So, in any case, we'll get off that. Well,
Yeah.
this has been an absolute pleasure chatting with you, John, as it always is.
Likewise.
It always is.
Yes.
So you
I'm
mentioned your
such a Matt
checklist
Hansen fan.
because we're helping people. We're helping people get out of stock market and grow their wealth. And it's
Right.
we don't get paid billions of dollars like, Fidelity and Vanguard, all those big companies are spending billions advertising. So we've got to advertise for, passively investing outside of the Wall
Yeah.
Street. We're serving our purpose. So you've got the great checklist and you have a great website. Thanks again for sharing all this great information, Jen. I truly appreciate it.
Yeah. I had a great time. Thank you.
All righty. Bye-bye.
Bye.
And that's a wrap. Thank you for listening to Better Returns, brought to you by Hansen Holdings. If you enjoyed this episode, please leave a 5-star review because it helps others discover this valuable content. If you would like to earn truly hands-off passive income, go to HansenHoldings.com, where we help you invest in large apartment complexes to grow your family's wealth. See you next week with another awesome episode. Have a great day.